Welcome into EP Wealth Advisors Informed Investor Market Update. I'm Rob Black, speaking with Managing Director of Investments, Adam Phillips. Adam, let's take a look at how the year is starting off. We just finished a 20% plus up year in the Nasdaq and the S&P 500. So we don't have a lot of data yet, but the Russell 2000's up 1.7% for the year. It's leading the markets as of Monday. The Nasdaq's up 1.6%, the S&P 500 up 1%, the S&P 400 up 1%, the Dow Jones Industrial Average up 0.4%. So far, so good. I don't think we really got the Santa Claus rally. The last couple trading days in December, the first few trading days in January, they didn't amount to much, but slowly but surely we're starting to put together what the market's going to look like at the beginning phases of 2025. You and I just talked briefly before going on air, and one of the things you said, it's nice to see the breath coming into the market. What did you mean by that, and what do you make to the start of this year?
Yeah, well, look, we've only seen a few days, but it is nice to see that so far. You mentioned the Russell 2000 small cap stocks. I was referring to the S&P 500, the equal weight index, which really just puts everyone on a level playing field, regardless of their size, right? And so we've talked about how in recent years, NVIDIA, Apple, Microsoft, these biggest players in the S&P 500, they can have an outsized influence on the moves of the market. And so if you just look at the equal weighted index, it's actually outperforming the S&P 500, which tells you that the average stock is outperforming so far this year. Now, it's only been a few days, but this is a trend that we always like to see. We hope it continues, but it's early.
So interesting to note that the Magnificent Seven is now kind of becoming something the eight as Broadcom joined the rally. I saw an acronym for the eight names. It was Batman. So it's Broadcom, Apple, Tesla. It's too much. It's too much. We have too many acronyms, but I thought that one was kind of funny because everyone loves Batman. Let's move on. We have a short week this week. On Thursday, the markets are going to be closed for honoring late President Jimmy Carter. But we do have one big piece of economic data lingering upon us to start the year. It's the jobs report. The jobs report comes out on the first Friday of every month. What are you expecting from this report? And does it matter? Because it seems like the Fed might be on pause anyway. What are you thinking about how the job report kind of influences the Fed Reserve this year?
I think it matters. I think the Fed is on hold either way for the foreseeable future. But I still think this jobs report is going to be really important to investors and to the Fed. We've seen signs that, yeah, the job market is holding up fairly well, but we are seeing some signs of softening. And so last month, we saw, so in December's report, that was for the month of November, it showed that the unemployment rate, it was at 4.2%, but it was just a hair away. It was actually rounded down to 4.2%. And so it was very, very close to 4.3%. And so we're seeing this trend where the unemployment rate is rising. It's not a reflection of layoffs, fortunately, but it is a sign of people coming into the labor force and not being able to find a job. And so that is the softening that we're seeing in the labor market. It tells us that, yes, we're starting to see things come into balance in terms of demand and supply of labor, but companies are less willing to go out and hire right now. And we're seeing that in various pieces of data that confirm this. The median duration of unemployment in the country is about 10 and a half weeks, so that's moved up quite a bit. We're seeing this in continuing jobless claims, which comes out every week, and it's a fairly timely indicator, and it just tells you how many people continue to file for unemployment benefits and can't find a job. And so I think that just tells you that the demand for labor is slowing down. We aren't seeing this translate into mass layoffs or anything, but it is something that we want to watch. And so that's why this week's jobs report is going to be important. It is just one report, and so we focus on the trends, not just one data point. I do want to mention that, and we know that the last couple reports have been noisy, and they've been clouded by the fact that we've had some weather-related issues like the hurricanes, we've had some strikes, and so we could see a little bit more noise in this week's report as well. But I think because of that, we're seeing some of the estimates are all over the place, and so I'm not even going to throw one out and just say I'm anxious to see it. And that it could be revised down the road. But I do think that we want to watch the jobs market very closely here in the coming months, and I'm sure the Fed will as well.
Yeah, the basic way that I look at that is if we have jobs, we have paychecks. If we have paychecks, we spend them. If we spend them, it helps the economy. So jobs are super important. I get that. One thing I don't really understand, and I'm going to throw you a curveball here. You don't know this one's coming. I don't understand the bond market. And one of the things I was doing to prep for the spot today, I saw that there's going to be a lot of issuance of debt bonds in this week. And how will the market absorb it? I started adding it up, and it's not $1 trillion, but it's starting to get pretty close to that. Um, it helps fund our government. I understand that. But what do you make of the bond market, and when they come out with new issues? How should we be looking at that as investors?
Sure. All right, first curveball of the year.
Yeah.
Thanks, Rob. And I thought baseball season was over, but no, this is actually something I've been watching fairly closely. And so the Treasury is constantly issuing bonds and what they call these auctions. And so we watch that very closely because we're trying to figure out. We know that we're constantly issuing debt. We know that we're likely to continue doing that for the foreseeable future. So we want to make sure that there's people on the other side to buy. We can't rely as much on foreign governments or foreign investors to purchase our debt. And so we're looking to make sure that there's ample demand there to eat up this supply, absorb this supply. This week, tomorrow actually, which is Tuesday, we're going to see about 30 billion, I believe, of 10-year Treasury bonds being issued, closer to 20 billion the following day for 30-year bonds. And so we're constantly watching this because we want to see how healthy demand is, and is there enough demand to absorb this? Otherwise, you run the risk of yields moving higher to bring in and attract more investors. So that's why we watch it. We've seen the 10-year Treasury. I think it's currently at about 4.6%. We've seen the 30-year Treasury. It's above 4.8%, I believe, as of this morning. So the question is, are we going to see yields continue to move higher? It's not all a reflection of this ongoing issuance. I think it's also reflective of the fact that the Fed's not going to cut rates quite as quickly as many had hoped last year. It's also a reflection of the fact that inflation has still not been defeated. It is trending in the right direction, but the progress has been, I think, slower than many had hoped. And so I think there's a few things that are moving the Treasury yields, but one of the reasons is obviously this ongoing issuance, and so it's something that we do want to watch as we're constantly issuing through these auctions.
Good stuff. Good stuff. And I always learn when I talk to Adam Phillips. Um, let's talk the Trump tariffs. I think 2025 is just starting. We're going to have themes, we're going to have trends. One of the ones that we're expecting to watch closely are the Trump tariffs when he comes into office. The Washington Post on Monday did a little bit, or over the weekend, did a little bit of reporting that maybe they're not going to be as bad as expected or as strict, or I don't know what the right term is, but maybe there'll be some leeway to negotiate, so to speak. As 2025 starts, what's your feeling on tariffs and how they might affect the economy and the stock market?
Look, it's another topic that we're watching very, very closely. I saw that Washington Post article. We saw the market move in response to that. We saw the dollar decline a little bit in response to that. And since just this morning, President-elect Trump came out and he said that that's actually not the case, that he doesn't know who those sources are, that they don't exist, and so don't read too much into that report. It doesn't necessarily mean that it's not true. He might just not be happy that this might impact uh, his strength at the negotiating table. We just don't
Mm.
know. But I think it is something that we and investors and business leaders are watching very closely because we know that it can impact the economy. It can impact um, uh, price levels, right? Inflation. It can impact profits. And so we're watching it for a number of reasons, and it's just going to continue to be an uncertain environment. I know the Fed is watching it too. At the December FOMC meeting, Fed Chairman Jay Powell said that right now they're approaching policy very, very carefully, and he likened it to driving in a fog, to walking in a dark room that's full of furniture. You just slow down a little bit and you wait to see how things play out before making these decisions in anticipation of what you think might happen or what you think might be ahead. And so I think it's something that we just have to continue to watch. And because of that, we could see some volatility here. It wouldn't surprise us in the coming weeks and months, just as people try to navigate this environment.
Thanks very much, Adam. 2025 is off to a great start. As always, your insights very, very helpful and very, very insightful is the way of saying that. I use the word very a little bit too much there. With that said, CFP, CFA, Chartered Alternative Investment Advisor, Analyst, Adam Phillips. He is the Managing Director of Investments at EP Wealth. I'm Rob Black. Good day.